Okay, so thank you so much for this early morning joining, and let me introduce you, our old friends, Zsolt Vince from Ergio Brian. How many years you have been speaker of our conferences, and so happy to see you. Unfortunately, not face to face as we used to do it many times before on the conferences, but anyways, happy to see you so much.
Well, thank you. Happy to be here.
Today, I would like to ask you some questions about what's going on global market, and to start a little bit from the United States, because last days we all watching what's going on in Chicago, on Chicago Board of Trade, what's going on with agricultural commodities pricing, they're going down. Can you please comment the current situation with the prices on the market for corn, for wheat, for soybeans? What's going on?
Okay, so right now the macroeconomic forces are the drivers, and today the statistics came down, and the jobless claims were up over 5 million, and the U.S. has lost over 22 million jobs in 4 weeks. Basically, every three out of 4 Americans are in a lockdown situation, and so demand for fuel is seriously down. Obviously it affects the ethanol industry, which is the biggest user of U.S. corn. 40% of the corn goes to the ethanol industry. And what happened, the margins went really negative for the ethanol industry, and the industry is slowing down production, but the demand is falling faster than they can slow down the production. So what happened from that is the basis fell apart. What they paid for corn, and so the U.S. farmer had on one hand falling prices at the Chicago Board of Trade, and then the basis fell on top of that. So the cash price considerably fell because of that. And right now, that's one of the biggest factors. And what we see on the ethanol side, because of the slowed down production, the DDG prices has went up. And now people are using more soy meal in the feed rations than DDGs, because they are just too expensive. To give you an idea, right now DDGs contribute 40% of the ethanol margin altogether, which is normally about 25%. Okay, but it's not sustainable. Ethanol production is slowing down, but the stocks are still rising, and the biggest problem is that ethanol futures are about 20 cents above RBOB futures, which is the unleaded fuel futures, and that's a bad situation because you are trying to blend a more expensive product into a cheaper one. On top of that, there were several states yesterday, they asked for a waiver on the blending requirements. So yes, it will further complicate things. But overall, ethanol is in the same situation as crude oil per se, because we've seen efforts to limit production, but the demand is falling faster. So as far as what's going on in the Chicago Board of Trade, we have seen a lot of risk-off trades where the macro funds are liquidating positions, and that has been weighing on the futures. On the other hand, one more significant factor for the U.S. farmer is what is happening with the currencies, namely that the U.S. dollar is getting stronger, and for example, the Brazilian real is getting weaker. So on the one hand, we see falling prices in the U.S. for soybean producers for soybeans, but prices in Brazil in the real is actually at all-time high, both for corn and beans. So those producers have an advantage compared to the U.S. And because of that, U.S. beans are still not competitive in the global market. Brazil is still cheaper considerably, even before you consider the quality differences, whether that's perceived or real, but just on the pure numbers.
My question is, you just mentioned this situation with ethanol, as currently you have started a planting campaign for corn and for soybeans. Will it mean that this spring American farmers will be more motivated to plant more soybeans, or what is intentions and how the current ethanol situation influence these planting plans of farmers?
Okay, so the USDA gave us 97 million projected corn acres. I think that will be the high mark. We don't see that becoming a reality because of what's going on with the ethanol plants. So I think there will be definitely less corn acres. And then right now the weather is not exactly ideal for the planting season. And the prices are a lot different now for corn than they were on March 1st. So that's another factor to consider. And then I think in general the farming economy in the U.S. is in a tough shape financially, and if it wasn't for the MFP payments, the farmers would be in really difficult financial situation. So I think realistically, the corn acres are going to be lower, but I would say the final number is probably going to be between, say, 94 to 96 million corn acres, and that will depend on the weather. But overall, we expect less corn acres, and there are some regional issues, like, for example, parts of Texas had too much rain, and it's still wet, and so there's going to be prevent plant acres there, and probably parts of North Dakota and South Dakota will not have quite as much corn acres as initially intended. The numbers today don't justify planting corn. I mean, realistically, in the Western Corn Belt, you are looking at around $3 a bushel cash corn, or less, depending on where you are at. And we anticipate that the basis is going to get probably wider, meaning that depending on how long the shutdown lasts in the U.S., then we'll be using less corn from the last year's production, and there's going to be more. The carry-in is going to get bigger for corn. So because of that, the basis could get wider, and then the board spreads are already reflecting that in Chicago. If you look at it, for example, just the recent, the May-July spread, about 10 weeks ago, we were dancing around 2 to 3 cents carry from the May to the July, and now that's significantly widened out, and we see generally the board carries widening out as well. Currently, the situation is that the elevator inventory is, or elevator ownership, I should say, is not very much in the U.S. either for corn or for beans, but the farmer has a lot of cash corn and beans to sell yet from last year's production, and they have been reluctant sellers. Now, just a fresh development, Sonny Perdue, the Secretary of Ag, announced today that there will be another aid package for the farmers due to the coronavirus. And that's
how big it will be?
Between 16 to 18 billion dollars is what they said, and they expect it to be released soon.